Hey y'all, a quick note before we start this episode. I recorded this conversation live with an audience with Raoul Pal in New York City, and I had so much fun doing it, but the audio is not up to my usual standards, let me put it that way. It gets better, but I would say the first 2 minutes in particular, my mic is a little bit blown out, so it's a little bit irritating to hear. It's nothing terrible, and I promise if you give it a couple of minutes, it gets better, but I did just want to give that heads up. Otherwise, I think y'all are going to really enjoy this episode. This was an interview I did with Raoul Pal. I've had him on the show before. He's just one of my favorite people. He's a macro investor. He's the founder of Real Vision. He's just a wonderful person. I really think of Raoul as a market optimist, so I love getting his perspective to fill me with a little bit of bullishness. But he's also gotten a lot right. We actually review what he's gotten right and what he's gotten wrong since the last time he came on the show, which was in January of this year. And then, of course, we get his predictions for what's upcoming, both in Q4 and 2024. You're not going to want to miss it. So please enjoy this conversation with Raoul Pal after hearing a word from our amazing sponsors who make this show possible.
Let me introduce you to a brand new company that I could not be more excited about, Web3 Sense. A Web3 analytics platform that combines on-chain data with social media insights to give you the deepest, most meaningful intelligence into any NFT community. I have tested other analytics platforms out there, but Web3 Sense has the most comprehensive capabilities I've seen in the NFT ecosystem. They apply sophisticated data science to wallet histories to determine behavioral patterns and help shape predictive analytics. In other words, they can tell you which Twitter accounts are actually the influencers in your space. And they can tell you what resonates most within a community by looking at what other communities token holders are involved in. The number of use cases here is virtually unlimited. So whether you're a trader, creator, institution, brand, agency, I promise Web3 Sense has data that you want to see with the deep and actionable insights that you need to build, analyze, grow, start, whatever you want to do within the NFT space and in terms of building a business and a community. Now, they are still in very early days, so they're eager to connect with the community. So if you're interested in learning more about what Web3 Sense can do for you and your business, and you should be, go and fill out the very short form linked to in the show notes, and someone from their team will reach out with more information and an opportunity for a product demo. Trust me, you won't regret it.
Let me tell you about OPENSEA Studio. Yes, you know OPENSEA. Perhaps you use OPENSEA, but did you know they launched OPENSEA Studio? It's a one-stop shop for all creators to launch and manage their projects. Using OPENSEA Studio, you can create and manage a drop end-to-end, including setting up allow list phases, uploading media and metadata, which has helpful preview functionality, and building the drop page itself. You can also mint an NFT or collection where the creator owns the contract. OPENSEA Studio lets you build on all blockchains compatible with OPENSEA, and there are 8 of them. Lets buyers mint an NFT from your collection using a credit or debit card, and there are no coding or technical skills required to do any of the above. OPENSEA will be adding more features and functionality to OPENSEA Studio over the coming months, including revamped collection pages with new storytelling modules, and more ways to leverage NFT technology, including redeemables, which y'all know I'm a huge fan of, and analytics. I'm an OPENSEA user because they have the best selection of NFTs and a truly inclusive view of the NFT ecosystem, supporting, as I said, 8 chains in 8 global languages. And because I trust the systems they've built to help keep the space safe, like copyright protection, malicious URL detection or removal, robust verification, and more. It is why they are the place to buy, sell, and now create NFTs. Check them out at the link below, and you'll be supporting the show in the process. Raoul, I'm so excited to have you here. This is our second official overpriced JPEGs conversation. You're one of my favorite people to talk to. I feel like I caveat with that every time I have you on the show, is I just have so much fun with you, and you were a big part of getting me into crypto and NFTs in this whole world. Yeah, I listened to one of your episodes on Bankless, a couple of them, I would say, before I even had this podcast. I sent it to all of my family. They can verify they're here. I was like, you have to listen to Raoul Pal. I made Zach listen to it. I think I listened to it like 3 times. So truly, you were a big influence on me. All right. So Raoul, one thing I said on the last podcast with you, it remains true, is you are just one of the most exceptional data storytellers out there. You're so good at taking a million inputs, turning it into a story. And I think people really appreciate that about you. Whether every precise prediction is exactly right or wrong, that's not the point. I think you'll put forward a story, and that's really compelling. So I want to look at the story you told us last time, which was in January of this year. I want to go through some of specifically what I felt you said. Let's grade you on the different points. And then I want to talk about where we are right now. How does that sound? Okay. So if people can go back to January of this year, there were still a lot of recession fears. I mean, last year, people were convinced that the world was like, we were about to have the next 2008. I was like sort of in that camp of fearing that. In January, you said you don't think the big scary recession that everyone is predicting was looming. Great on that, I'd say. Quite excellent. We have not had a crazy recession along the lines of what people were predicting. Would we agree?
Yeah, we will have a mild recession. That was always my base case.
Okay.
But everyone was apocalyptical. It was 2008 again.
Yes.
Everything's going down 50%, 60%. Obviously, crypto goes down a lot more.
Sure.
It goes down 80%. But generally speaking, I just wasn't that bearish.
Yes.
And the market had priced it in last year.
Yes.
Which was the big thing to me. It's like, when ETH bottomed in June, Bitcoin, the rest of the space bottomed in October, that was like, it's all priced in. We've got it all in.
But you said you think we will have a small recession, as in it's still
it doesn't matter
on the
because
horizon?
the markets
Have
looking
priced that.
forwards, so it doesn't matter. Everyone's like, I want my recession, I want my 50% sell-off in the S&P. You're not going to get it. You had the mild recession sell-off last year. That's what we're going to get.
So let me ask you this. How do you define, this seems like a silly question, but how do you define recession? Is it 2 quarters of negative GDP?
Well, that's what most of us think of, but it's actually driven by the MBER, and they've got a whole bunch of different parts of what drives a recession. But basically, if we see unemployment pick up from here, we're likely to have called all of the factors that the MBER have for recession. So we're very, very close. All of the indicators that I use suggest we're pretty much in negative growth now.
So we're pretty close. You're saying we're probably in a recession, or very close to being in one.
I put this on Twitter on the weekend. I said, how many of you have laid off staff, been in the industry where staff have been laid off? How many of you are seeing growth? I mean, it's obvious. I mean, it's obvious we're in a recession. I don't know anybody's not laid off staff unless you're in healthcare or something like that.
So why does it feel different? Like, I don't know if it does not feel the same way that I feel like I felt in past recessions, which I felt much more obvious.
Because you are scarred by
2008.
So don't forget, you were at school in 2001. Most people graduate or around graduating. School meaning, well, we use school in different terms, so high school. A lot of the millennial generation graduated around the financial crisis. Those were 2 big recessions. And then the pandemic.
Right.
So you've had 3 of them on trot, which were abnormal.
Right.
I actually graduated in 1990, and we had a recession then. The S&P was down 30%, 28%. It was very much like this one.
And it felt this way.
Just like this. It was miserable.
Were there debates then about whether or not we were? It feels like we have debates now about whether or not we're in a recession.
Every single time I've ever seen the yield curve invert, or every time there's a recession, there's a debate about this. Every single time.
Okay.
So
that's interesting.
I don't see anything different.
Okay. Second point you brought up in January, you thought that the market would be up and down throughout the year, because that's what happens, but that all in all, we'd probably end up from a market perspective, as in your equities and whatever would be up this year. So far, pretty good. So do you think we're on track for that? I mean, we're 3 months or whatever we are from the end of the year.
I think the NASDAQ finishes this year at all-time highs. I think the S&P goes to all-time highs. So Q4 for me is the weaker period. That's when the recession comes in. So that's when we've already heard today, really, all the Fed were out saying, we've done enough. Bond market's gone too far. The bond market's overpricing this. Things like Janet Yellen saying today, really interesting comment. She said, well, when we think about it, financing the debt is going to be about 1% of GDP for the next 10 years. Well, if the government's 100% of GDP in debt, she's basically saying interest rates have to be 1%, which is part of this everything code thesis I've had. So what I'm seeing is liquidity starting to pick up. I think they will stop quantitative tightening this year. And then it's a bit complicated here, but the Treasury have been issuing new stuff. So that's the TGA bill, but that probably slows down. But the reverse repo, which is the other part of the liquidity stuff, start draining. And that probably pushes liquidity. If they take QT out, it just means liquidity rises. So generally speaking, crypto is the multiplier. So if I look at the NASDAQ's up 38%, Bitcoin's up 70%. So if the NASDAQ finishes the year up 48% or something like that, which would be a hell of a year for the NASDAQ, well, Bitcoin should finish up 100% plus.
Wow. So let me see if I can distill that. you think we're in a recession or we're about to hit a recession, Q4 will probably be recessionary, which means that the market is pricing in what comes after a recession,
Correct.
which is growth. It's also
Growth
probably pricing
and stimulus, more cowbell.
Right. And that's what I'm saying, specifically that there may be some level of interest rate cuts. Do you anticipate cuts or just that we'll stop?
No, cuts, absolutely.
So because of recession, we'll have interest rate cuts.
Yeah.
That's then coupled with you have more liquidity suddenly in the system.
Yeah.
A combination of a change in interest rates, down, if we're lowering interest rates and we're adding liquidity, that is just the magic combination then for equities and then, as you said, crypto as a multiplier.
And
so you feel like this will play out over Q4?
Yes.
We'll be in this recession and yet markets will actually start to
So
rip.
this is macro spring and crypto spring. The cycles are actually the same thing. The Bitcoin halving actually just relates to the macro cycle.
Let's talk about that.
Which is all interest rates in 2009 got reset to zero everywhere. It was a debt jubilee. It was a great reset. Nobody understands this because everyone wants their debt jubilee was to forgive all debt. They didn't. They forgave all interest payments. So what happened is every government on earth reset their debts between 3 and 5 years. So we've got this 4-year cycle, which is the Bitcoin halving cycle, which is the economic cycle. They're all the same thing. So now we're in the phase where we need to pay the interest on the debts from the pandemic.
Okay.
In 2024, 2025, those went exponential. And the only way of doing it has been put it on the balance sheet of Federal Reserve. So I went back and I think I was the first person or the only person to show that all balance sheet growth of the Federal Reserve was just the payments of the debts, the interest. So nobody's paying interest, even though interest rates went up. They don't pay them. They pay them for this period. When it comes to actually pay the interest, they stuff it on the central bank balance sheet. So nobody can afford to because the government is 100% of GDP in debt, just over that. And if interest rates are at 5% and economic growth's at 2%, well, there's 3% difference because GDP growth is all of the income for the economy. Well, if that's not enough to pay the interest alone on the government debt, how the hell are you going to pay the private debts, which are 120% of GDP? These are the maths that form part of that everything code thesis. It's like there is no way they can have interest payments here because what's going on today is they have to keep issuing more bonds and more bonds and more bonds.
To pay the interest from
the previous ones. So they can't do it.
And so walk me to the conclusion of that.
So the conclusion of that is there is only one outcome to everything, which is more cowbell. So they either yeah, and so they either stop yields rising, like in Japan, it's called yield curve control.
Okay.
And what that is we will pay this price, let's say 5% on bonds, regardless of how many you sell us. And to do that, they print money. Or
it's either more liquidity.
or I think they're trying to overshoot with inflation on the downside, bit of unemployment rising, so then they have the cover to cut interest rates
okay.
and stimulate. Election year, always stimulus. So all roads lead to more cowbell.
More cowbell, meaning good for markets.
Yeah, more cowbell is like the ding, 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 ding.
And I know the reference. Isn't it an SNL reference?
That's right,
yeah,
but
yeah,
it's the Pavlovian response,
yeah.
right? And what more cowbell is debasement of currency. So you're mutualizing the losses of the interest payments, not just to the government, but across everybody by doing it.
So I want to ask you, I'm not going to ask you this right now because I want to finish my little game here where we look at your past predictions, but this gets me to, Jim, what you and I were talking about earlier, which is, do you anticipate a moment where Bitcoin and maybe crypto broadly is like decoupled from equities and these other assets? Like does, in some ways, like does the, Bitcoin as a hedge to inflation and debasement ever play out? Okay, I guess answer that now and then we'll circle back to my game.
No, because they're all driven by liquidity.
Okay.
So they're all correlated.
So the argument that like, oh, it's good for inflation, like, it's kind of BS.
It's the point being is you debase the currency, all assets rise because you're optically debasing, which is why the Argentinian stock market goes up in a straight line until you put it in dollar terms and it's actually gone down 90%.
Oh.
That's debasement of currency.
Right.
Venezuelan stock market's the same. Right. All of these Iranian stock market, they're all the same thing. Why crypto outperforms is really simple. It's got a faster adoption curve. It's a technological adoption story. Everything else is noise. It's technology plus debasement. NASDAQ is the second best performing asset. Why? Technology plus debasement. The S&P basically just about offsets debasement plus dividends. Real estate doesn't offset it. Gold doesn't offset it. So what I started doing was dividing all assets by the Federal Reserve balance sheet as a rough way of looking at it. And you get a really different picture. The S&P has gone sideways forever, which is why people who invest in their 401k in the S&P passive index, they never get ahead. So because property goes up and gold goes up and all of the assets go up the same amount. So you're just not making gains. NASDAQ and crypto have been the only two assets that do it.
Would you say that there's like almost an intuitive understanding of that among like a younger generation? Not that they could articulate that, but that is what explains GameStop and like the shit we're throwing at the wall.
I've written a lot and thought a lot about this. And in fact, I've done a documentary on this. So the millennial cohort in their 30s did what they were told, which was 401ks. That massive cohort has completely disrupted how assets are priced. So index funds go up versus all active investments, which has destroyed the hedge fund industry, the mutual fund industry, everything, because millennials are doing exactly what they're told.
We just put the money in a Vanguard fund.
I mean, they're good. You know, they're like a good badge to do the right thing, and you know that's how the system was generated for them, and so they've done that. But what happened in 2020 was the same that I saw with the Occupy Wall Street movement and the Indignados in Spain when I was there. Is like the pandemic hits and they're like, we've been doing what we're told, but we can't afford anything. We're in debt. House prices go up. We're not getting any richer, and we're all doing two jobs. Yeah. So what the hell are we supposed to do?
Right.
So they took a rational approach. The media, and it really annoys me, the media scoffed at them, as did Wall Street, to say they became gamblers. But they didn't. Well, they did, but what they did was use their discretionary income, because they were doing the 401ks and they were doing all the right things, but they took discretionary income and said, we need something with a high risk reward.
Right. Put it on black or whatever the expression is.
Yeah, and it was actually a very valid thing. So the two assets became crypto and technology options. So it's the rise of Robinhood and the rise of Coinbase. And I've gone down the rabbit hole on all of this. So to put it in perspective, online brokerages, so the kind of cognoscenti of people who trade kind of global macro, they use interactive brokers. Interactive brokers have 5 million users, 300,000 monthly actives.
Okay.
It's tiny.
Compare that to
Fidelity, TD Ameritrade, and Schwab. Between 2 and 4 million monthly active users. They've got these vast number of brokerage accounts. That's baby boomers and their kind of mutual fund stuff. Robinhood has 24 million accounts, of which 12 million are active. That's 4 times the size. It's all of the rest of the industry added together. Coinbase.
I was going to say, do I want to know the answer to Coinbase?
Coinbase is 108 million accounts, of which currently, right, we know on-chain activity is super, super low.
Right.
And that's 9 million. So I was at Coinbase yesterday and we were talking this through. I'm like, if we normalize crypto volumes, Coinbase will have 30 to 40 million active accounts. Now,
so you're saying right now it's 9 million monthly actives?
Monthly actives.
And that is really interesting to have it in perspective relative to what you just
That's right. So it is going to dwarf everybody. I mean, it's a staggering thing. Now, don't forget, last year, crypto adoption in a market that went down 85% or 80% went up 42%.
And how are you measuring that?
So that is the the crypto.com survey of number of active wallets, and they do a good job of cleaning it up.
Yeah.
And it got to 425 million last year.
Which was a 42%
increase.
Wow.
And in good years, it goes up 100 to 200%. So the average rate of adoption for crypto has been about 100% a year, ongoing every single year, which is ludicrous.
That's why I like talking to you, because I'm like, I have a crypto podcast. I'm like, oh, that sounds bullish. Like I should be in that thing.
Yeah,
like,
you should be.
This sounds like a good move.
Don't give up. But so it's interesting. Another thing I'm going to give is about NFTs in this.
Okay, great.
So what people don't realize here is everyone thinks we've developed this new world, this crypto world, and it's new. And then you ask me, is it related to the S&P? Yes, it's the same fucking thing. It's liquidity.
Yeah.
But liquidity drives the risk taking within crypto, as it does in normal markets.
Yep.
So right now, as the economy slows down, the Fed start cutting, people will buy treasury bills, bonds. Mm-hmm. And then they'll buy corporate bonds, then they'll buy junk bonds, then they'll buy emerging market junk bonds, and then they'll buy private credit, right? That's the risk curve.
Okay.
It's exactly the same in crypto. So first part of crypto spring, macro spring, people buy Bitcoin. And then when they get a bit of confidence and things working, they get onto Ethereum, and Ethereum starts outperforming Bitcoin, and we're about to get to that stage. And then before you know it, you start going down the risk curve. So then the good projects, Solana or whatever in the middle, Polygon or whatever, start doing well. And then you go to
and then they'll buy my crypto
cowboy
accounts.
land, and you go to everything. Yeah. So that's the risk curve. What's really interesting is once you start to understand that crypto is an economy, it's just a digital nation state, and Ethereum is actually the larger of the nation states. The Bitcoin economy has more money, but the Ethereum's the larger.
Really.
That's right.
Yeah.
It's like Switzerland, right? It's just
Yeah.
old people storing their money.
Yeah.
Well, Ethereum, there's a lot of stuff going on.
Yeah.
And so the Ethereum economy acts like the US economy. So if you look at the US economy, assets lag the economy. So the stock market's been going up. It's had a good year so far, but house prices are going down. And art is still going down. And the magic one is Rolex watches. So Rolex watches are still going down. Why? Because none of us have got any money, right? So there's no liquidity because markets are not at all-time highs. We haven't participated. We don't have money coming in. Everyone's laying off people. Everyone's feeling a little bit tight, so they sell watches. That is exactly the same chart as NFTs. Mm-hmm. And they all lag by about 18 months. So assets lag the economy or the market by 18 months. So if the ETH economy bottomed, the bottom of the recession of the ETH economy was June 2022.
Yeah.
So 18 months later, we're kind of getting to the bottom of the NFT market.
Okay, I followed that now.
Yeah.
So you're saying this should be the bottom. I called the bottom of the NFT market about 5 months ago, so I was wrong.
Yeah, no, because, yeah.
I was.
Okay,
no,
you were.
Objectively. Everything went down much further after that.
But the point being it's around here, and what we're starting to see is exactly what happened in crypto last year was ETH bottomed first.
Yep.
5 months later, Bitcoin and everything else bottomed. So here we are, high-end art bottomed first, and it's starting to be in a bull market. You know, what we saw with Refic today, you know, we're starting to see
things start to come back.
The highest quality assets like Bitcoin was at the beginning of the spring. So we're kind of transitioning from NFT winter to NFT spring. We're not there yet. So it's a bit confusing because every day it's snowing and then it's sunny and then it's cold and then it's raining. It's that.
Do you have a view on what subcategories of NFTs will reemerge as we maybe start to enter summer? Like you had the PFP craze. It almost feels hard for me to imagine that as it existed previously will come back in that same way. Is there a class within this that you think leads this next run?
I think NFTs are much bigger than almost anybody understands. Everything we do as humanity is a contract. Me turning up today was a contract. It wasn't a written contract, but it was a verbal contract. You and I agreed, and I came, as with everybody here. Humanity is organized around social contracts, just contracts in general. It's how we organize. Religion's contract. Every single thing we do is a contract. Every payment we make is a contract. NFTs are the ability to store that. So the first use cases are just the start. So art, great, because what we've happened in a digital world is everything in a digital world you can make infinite abundance of. So it goes to zero in value. Well, that's not very good for us. So what you need is something that creates digital scarcity. Right. A smart contract, digital scarcity. Perfect. Okay, so art, first one to latch on, makes total sense. PFPs, it's like, okay, I talked earlier about digital nation states. What we are is now, we're in the same community. We don't live in the same city. We live in different countries, yet we're part of the same community. So community is now a globalized phenomena without borders. So how do we create borders around our community? We use PFPs, NFTs, other ways of creating identifiers, social identifiers. So I don't think that goes away. It just depends what's the quality of your community like. You know, you've got a good quality community, people will come out. If you've got a crappy community, they won't. But that's just the start of where NFTs are going.
I feel like my timeline has changed. Like, as somebody who's obviously very bullish on this technology, and at times during the bull felt like we were a few years away from something because of the pace of technology and the way everything moves, I feel like I've subsequently pushed my timeline out a little bit more. Like, and you take this big view, and I'm maybe going too micro here, but I feel like NFTs lack context a bit. And what I mean by that is, and I'll use this, like, I'll tell the story of how I think this stuff goes mainstream, is digital twins, for example, right? Enough luxury brands, you already are starting to see this, free NFTs that they give with the item that you buy. Enough Gen Zers start to realize, like, hey, I've got all these digital items. I want to see other people's and I want my friends to see mine. And suddenly you start to have context around these things that you own digitally. And I think we're further away from that phenomenon happening than I thought we were 2 years ago.
So everybody makes the mistake of over-extrapolating a trend and then underestimating a trend.
Okay.
So when I got into Bitcoin 2012, 13, I just said, oh, the entire financial system's going to go on blockchain rails. Mm-hmm. Here we are, 2023, and we're starting to see it. Mm-hmm. Okay, that took a long time, but it was absolutely...
Well, we're still not really there.
No, but it's just starting. We're seeing Franklin Templeton have created the money market fund that's on chain. That RWA, real world asset thing, is like, it's the big trend. Whether that happens in this cycle or not fully, no, probably not. So the trend is right, and it doesn't matter. It doesn't matter about what you're living in today. Our job is to live in the future.
I'm being too logical about it almost in some
ways. Yes, you need to live in the future and not the present. Because the present, the price is a liar, because it doesn't, it always looks at you're always looking at the present when you need to understand the future, and that is the growth you'll extrapolate out. And if you aim for that and then look backwards, you kind of understand it better. It's kind of weird world, but people are like, well, where's this, where's that, where's that? It's still coming, and it's so early is a typical one of those bell curve memes, where you can be the moron on the left and the genius on the right. It's both.
Yeah.
We are so early, and that means just keep doing it.
Yeah. It's always darkest before the dawn.
Yeah, because you don't see it. So it's like, most of us didn't see it, but when I was in my 20s, we had dial-up modems, and it was a nightmare. Couldn't download anything, nothing worked. It's like, well, how's this internet? This is just frustrating. Just send me a fax. It's easier.
Right.
You know, and the technologists were saying, no, you don't understand, because we need broadband and that's coming, and we got this and that's coming, and we need compute power and that's coming. I'm like, well, I don't see it.
Y'all know the phrase, not your keys, not your crypto. Well, in a world where too many people have had to learn that the hard way, Overpriced JPEGs is proud to partner with Ledger, the world leader in critical digital asset security. Ledger's Nano S Plus and Nano X hardware wallets, paired with the Ledger Live app, Ledger's own software for setting up your Nano device and managing your crypto assets, is the easiest way to start your crypto journey while maintaining full control of your digital assets. You can use all your favorite dApps with Ledger Live, accessing 15 plus Web3 apps, including 1inch, Paraswap, Lido, and Zerion. So you can not only manage, but also grow your portfolio. And Ledger Live is available on mobile and desktop. Securing digital assets shouldn't be complicated. Ledger is as easy as it gets. Uncompromising security, effortless connectivity, full transparency, Ledger is your one-stop shop to trade and track crypto, grow your assets, and manage NFTs. Secure your future with Ledger. Visit shop.ledger.com today or check out the link in the show notes.
Well, there are, I just interviewed Zeke Fox, who wrote a book, Number Go Up. I don't know if you've read it. He's very skeptical. He's a Bloomberg investigative reporter. He wrote about,
Oh, yes.
He wrote about Tether. He was investigating Tether, and as part of that,
we've all gone down the Tether FUD game,
We've all go down are they solvent? But I have to say, it was a good book. I mean, again, he hates all this stuff in a lot of ways. But, his point would be, look, I was somebody this is him talking, like, I was really into dial-up. Like, I was into, like, early internet, even though it was a pain, there were things I clearly could do that I enjoyed, and I just don't see that here
He
in
probably
blockchain
doesn't
world.
enjoy making money.
Well, that as just gambling as the
Yeah, but it's
only
not
sort of thing
gambling,
to do.
right? So
Sure, but you know what I'm saying. Trading
if he
is
had
the only
been
thing to
given the
do.
opportunity to own a broadband network, or he'd been given opportunity to own the infrastructure rails for the web, he'd have thought about it in different terms. This is what this is. It's like we've never been given the opportunity to own the infrastructure layer
Right.
and own it before the institutions. I always talk about this. We're front running the institutions. And it's not like it's some mass illusion or delusion. I know it because I speak to them all day. They're all coming. All the investors are coming. And we get the privilege for the first time in our lives to own this because everything else is VC. Early stages VC.
Right.
To invest in VC, you need to be an accredited investor. Not only that, but most VC funds won't take you unless you've got a certain amount of capital. So it just knocks everybody out of the actual largest part of the economic pie that gets made. And then eventually something goes public and only a few of those companies make a lot of money. So we're so disadvantaged as ordinary people.
Right.
This, we're first.
Which also plays into the story we were talking about earlier about like, there's almost like exactly, GameStop. There's like an intuitive understanding of that being like, I can't play that game and win,
it's a
so I have to play a different game.
It's a cultural movement.
Yes.
And the cultural element is incredibly important. And I think people intuitively understand that this is our time.
So you're saying we're starting to get into spring. You're talking about these cycles. Do you see cycles as typically being 4 years? Is that a cycle?
No,
to you?
they vary
Okay.
depending. It just so happens that we've got this debt cycle. Because don't forget, when I started my career was in 1990, I didn't get a recession again. I graduated into a recession. I didn't get a recession again until 11 years later, 2001. So they were quite long. And then 2001, 2008, that was 7 years.
Well, and then we had a really long cycle.
Then we had another really long cycle. So, and I was with a good friend of mine, Jordi Visser, today, who's really interesting. He's ex-macro guy, same kind of hedge fund. He was at Morgan Stanley, I was at Goldman, same career, same time, same thing. And his theory is we won't have meaningful recessions ever again.
Is it like a modern monetary theory thing? Like if we could print
No,
money?
it was fascinating. His idea was recessions are caused by a lack of supply, or too much, not enough demand, too much supply, or a lack of supply, lack of demand, right? So if you think of the pandemic, everyone came back to work.
The supply
there
chain
wasn't enough,
issue.
right? And that's the boom bust cycle in commodities that creates recession and credit. There's not enough money when everybody wants it. And his argument is, well, now that everything is digital, including humans, which is AI,
Robots.
what you've got is abundance of everything. And there's so few things you have limited supply of that you can solve those problems. And so therefore any recession coming is going to be mild because it's not about the oil market and physical stuff.
So I want to push back. I can feel my like boomer father's like skepticism like radiating towards me as we're having this conversation. Generation Jones, apparently. So like, for example, I can anticipate what your reaction is going to be to this, but to ground us in a current event, we obviously have war breaking out in the Middle East. We still need to eat. Like there's still all sorts of physical stuff. Coming off of COVID, that was the problem, was you had supply chain issues in physical goods. We wanted cars, we wanted grain, we wanted those kinds of things. And I've talked about this because we kind of share a view that it was like, it was always strange kind of acting like inflation was because of these stimulus checks. Like what, because a bunch of us people got $1,000, like a year later we still have inflation. That makes no sense.
Stupid.
This is clearly a supply-led inflation, inflation problem. So yeah, how do you respond to something like that? Like all these physical still does drive recessions. I guess to your friend, I would put that.
So I made the mistake of being in the middle of the bell curve.
Okay.
In 2007 when I set up an agricultural hedge fund, trading agricultural commodities.
Okay.
Because I'm like, clearly there's too many people and, we have this and we have too few varieties of wheat. And if one of them gets wiped out, the whole blah, 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 million explanations.
Sure.
The actual thing is productivity of agriculture just keeps going up every single year.
So your point is technology will enable.
And I didn't understand that, and I didn't want to understand it because I thought the world was cyclical and I didn't realize. And I'm like, okay, the cost of producing wheat, corn, it just goes down every single year. So fight that trend is ridiculous. Of course, you can have blips because something happens, the Ukrainian harvest fails, or there's a war, or whatever it may be. But that's really hard to fight. But the really important thing here to understand, and this is the conversation I had with Jordi Visser, and this is getting a little bit deep, is economic growth is measured by the three key variables are population growth, because if you've got more people doing a bit of economic activity, it's a bigger economy than less people, right? Which is why the US economy is bigger than the Dutch economy or the Cayman Islands economy. Then you've got productivity growth. How much do we get per unit of energy out of the production base, what we're doing, the activity, and the other is debt growth. So debt growth hit its limit in 2008, and we're just now paying the interest on the debt. Population growth has been going down, right? Nobody has kids anymore. Most of the Western world is now in decline. They're starting to shrink.
Elon's very concerned about it.
But they're not, because, as we talked about earlier, robots are the new demographic. We can now create infinite
People.
productive units. People. Infinite. AI, human knowledge was a scarce asset. We've now made it infinitely scalable. People cannot comprehend the magnitude of this.
Let me explain this, because I think to a lot of people it feels like there was this, like, we had this AI hype moment, and then it sort of died down a little bit. Now, my perspective, I hear that OpenAI is so far beyond what they've released to the public and are literally just trying to drip this to the public because they're so scared of the reaction when people realize like how far along they are. Give some insight into that.
People really have no comprehension how big this is. This is the second, either the equal or second equal to the splitting of the atom in terms of importance to humanity.
And you describe, would you say AI, just like in general?
Just AI in general.
Yeah.
And if people who haven't seen the AlphaGo film on Netflix.
Where he beats the Go player? Go player?
So what was interesting about that was that story, okay, great. They developed this large language model that hadn't really been built before by DeepMind out of the UK, and they have to plug the UK for that.
Well done. We're going to plug Ledger in a moment.
Oh, okay,
but finish your story and then we'll do it.
So this thing plays the world's best Go player, which is the most complicated strategic game that humanity's come up with. And it wins, and then it loses. And what's amazing is there's the commentators who are experts in the game commentate on it. And they're like, well, it's playing this move, and that's interesting. Kind of like when Gary Kasparov was playing Deep Blue in chess, and that was kind of machine learning.
Okay.
But then what happened was it lost a game.
It lost again, or it lost
No, it lost
a game.
one game. One game. Then something happened, which was extraordinary, is these commentators are like, what the fuck is this thing doing? I don't understand the moves. These are stupid.
Yeah.
These don't make sense. Nobody plays moves like this. This is not, it never lost
Again.
to a human again. And what that tells you that it learns in ways we don't understand. There was a unbelievably interesting interview with a guy from Anthropic who's purposely being scary about, as Sam Altman is, because they want regulation around their monopoly. But they're developing at Anthropic like an MRI machine for AIs
Okay.
because they don't understand how they think.
Oh, I see.
If that doesn't make your hair stand
Yeah.
on end, right? They do not understand how this works.
Well, you can tell, as much as I understand the argument that like all these executives are just paying lip service to wanting to regulation because that's what they have to do to curry favor. These guys are scared. Like these guys are clearly, these executives, in a way that they were clearly not scared when they were developing Facebook. Like they did not think that there was something really deeper, scarier lurking under Facebook. Like these people are scared of what they're building because they don't understand what they're building.
Yeah, and this is a humanity scale. Humans are not special anymore. Right. By the time the Tesla Optimus robot comes, we don't have staff behind the bar serving us Basil Haydens. We don't have drivers. We don't have anything. It's like, now that doesn't mean humans are redundant. We find different ways, right? And I think societal, communal things is what what humanity finds its purpose, which ties us back into crypto and organized online societies, how we participate in societies, how we can earn universal basic equity, which is the Yatsui idea around participating in cultural communities. We can do that. We can get paid for it. You participate in overpriced JPEGs, and what happens is you can get rewarded. You get gin. You can have a hangover. All of these great attributes, but also to tie AI back into crypto, because at first everyone in crypto was like, what the hell? What? Right. Hey, look over here. We're the interesting guys. Yeah. But this is the fastest thing we've ever seen, the biggest thing. But really, they're so interconnected because, look, a Tesla is a robot with the world's largest supercomputer, Dojo. That whole thing, Tesla have made it a complete game changer, is as opposed to machine learning, a stop sign is red, it's shaped like this, you do that then, which is machine learning. It changed to large language models via video, and it just took 5 million Tesla cars video feeds, and they've all got 8 cameras each. That's a lot of video, and it's just learnt itself how to drive by watching humans.
So how close are we to it? Because I feel like self-driving cars has been...
that is happening right now. Tesla is training this. Right. They have the largest supercomputer on Earth, Dojo. So this is going to go to warp factor 10 in acceleration. People don't understand.
So again,
machine learning to AI.
What does that mean in terms of like self-driving? It feels like self-driving cars have been promised for it's like we're always 2 years away from self-driving cars.
Yeah.
It feels like.
Until they're everywhere and there's not a single...
This is my question. When is that happening?
Until there's not a single Uber driver, bus driver,
Well, this is why I joined Yang's
truck driver, UPS driver, not one of those will exist within 10 years.
10 years.
And I would say within 5, people will just make the choice of never driving again. Okay. So 5 years, right? This is a staggering change. Yeah. But what's interesting is your cars also are missing one thing. We have the robots, the cars, your fridge, every electronic gadget is now able to have intelligence.
Internet of Things.
With intelligence. So your fridge will connect with your Amazon, which will connect with your wallet, which will pay via crypto, right? So the crypto is the payment system. So here's a thing that most people don't know.
But why wouldn't it just, and I want to get to audience questions, so we'll get there in a minute, but like, why wouldn't it just be Apple Pay?
Because it's instantaneous streaming payments.
Borderless, but it's pretty
and it's borderless, you don't have currency, you don't have the cost base. If you've got everything paying everything endlessly, why pay it
Why isn't a credit card instantaneous? It doesn't settle.
Well, because you're paying the money to Visa.
Yeah.
Visa, this is why they're disrupting themselves.
Taking the cut.
Because,
so it's going to be like the
because if you've got micro payments for everything,
right?
So you've rented a microphone, the microphone takes micro payments for the number of minutes you speak. You can't do that in traditional rails. Right. But that's an incredibly efficient use of capital.
You're saying like the same reason that a convenience store has a $5 minimum on a credit card, it's because they don't want to pay the percentage that they're going to have to pay if you on a $4 charge. That's why crypto makes more sense than using an Apple. But even an Apple Pay.
So here's something most people don't know.
Payments, traditional payments enough.
So we've now got, Elon Musk has really opened up space. People kind of understand that, don't really understand it, right? I'm using Starlink in Little Cayman because in Little Cayman, Grand Cayman, I've got 1 gig broadband. Little Cayman, it's patchy at best. I've now got 100 up, 100 down in this little island of 140 people, thanks to Elon. So it's like, okay, this is amazing. But up in space, what's happening is there are massive data centers being built because it's inefficient to send satellite data down to Earth and back up to the satellites, all the weather stuff, all of the stuff, because you can put up a satellite now for about $1 million for a satellite this big, but it will come down to $10,000 within the next 5 years. So everyone can put up a satellite. So the server farms going in space, I mean, who'd have thought this, right? Those server farms are getting paid in crypto because there's no sovereign state and no payment rails. So crypto's the payment rail. Really interesting.
It's the universal payment rail. It belongs to nobody, therefore.
It belongs to nobody, therefore it belongs to everybody. Yeah. So it's an infrastructure that can happen up there. So that's all happening. So go to another point about where these worlds collide is we are about to go through, and I just want to warn you guys because you live here, we're about to go through the worst 12 months in political, social terms
This is going to be my last question to you. Is going to be a political one, and then get to
you are ever going to go through. And it's not because the country's split. It's not because you won't agree with the politics or whatever. It's because you will not trust
what's real.
anything. Nothing you see, nothing you read, nothing you hear is real. It's already happening, and you will not know when you watch an image online and you definitely see some atrocity, some politician saying something happening, Iran claiming that, yes, we want to behead babies in Israel, you will not know if it's true. And you will have a human visceral reaction to believe it because you believed in the media. And you will not believe in any single thing. And it will shatter your trust in humanity. And there is no way around it because of AI. I'm already building a large language model, Raoul. And you can ask
put
it
out your
questions.
content so you don't ever have to leave the Caymans again.
Yeah, that's right. And so I can just put my video image here, the hologram.
Hologram.
You can ask it questions on Spanish wine. It's ludicrous already, right? And I've trained it on a small data set so far. But there's the audio version, so you can just call me up and chat with me about stuff, so you wouldn't have to get me here.
Yeah.
And the video version is already happening. Peter Diamandis is showing him having a conversation with his digital self. So digital people driven by AI to give any messaging you want to any single person in any single way is happening already. And in an election where we have polarity and political parties will use this technology and rogue nation states will use this technology, it is horrific.
It's very scary.
The only answer to this is digital authentication. We need blockchain ID. My guess is this is going to be a watershed moment. Here's my prediction. This is a watershed moment, 2024, that is as big for the big tech, for the social media platforms, as the financial crisis was for the banks. Not in terms of share prices. They're going to get sued out of existence by the government, who are going to be super angry because nobody can control the information.
I thought you were going to go the direction, because last time you were here, and then I really will turn it to audience questions. They're the only ones who have the scale right now to do what's needed to happen to properly authenticate things.
And I mentioned this to you
Last we spoke.
They're not going to do anything about it.
I know you've been talking to them.
Because they can't. Yeah, I tried to talk to them all.
Yeah.
They will not agree to common standard.
Yeah.
And so I'm like, do you understand what's going to happen after the election? You're going to get sued tens of billions of dollars, hundreds of billions of dollars for all of this information. And they're like, we don't know what to do.
You don't think this is like a section, they'll cry Section 230, like it's not our fault?
The government will fine them because they want the money.
Yeah. Yeah.
They will. And they didn't do anything about it. They could have had authentication. A blue check is not authentication. Mm-hmm. We need something better. We need, kind of zero knowledge proofs. We need some way of navigating online. And in a world where we're going to multiply human units by not 2x, 3x, but like 1,000 million x, right? Nobody
Numbers
can get their
you can't
heads
wrap your
around
head
this.
around.
We are multiplying the human population in terms of its capacity. 1 million x. You'll want to know who are them and who are us. And that's in itself, I don't know if all of you need to watch, there's a brilliant UK series on this
Another
called
plug.
Humans.
Another UK plug.
Yeah.
Called Humans.
Humans.
Okay.
And it's about kind of these Optimus robots and AI and how we integrate them in society, and do we think of them, do we become racist to them? But one thing is they need passports and we need passports to operate in this world, so we need to know who we're operating with.
Yeah.
And that has to happen, and that has to be blockchain technology.
Okay, well, let's do this. we did it all. It was great. Let me do this. We want to plug. You and I are going to be hanging out again on Friday, digitally, virtually. Real Vision and Ledger are partnering up. Do you want to?
Yeah. So we're in Crypto Spring. We're going to Crypto Summer. We've all made mistakes of the last cycle. We all know what the mistakes we've made, and we all want to get it right. So education is everything. Education in this space is really important because it's a new technology and we're trying to figure it all out. So we've partnered with Ledger. Real Vision is a big educator of people in the space. And we partnered with Ledger. It's called the Festival of Learning. It's absolutely free. Just join it. Go to realvision.com/festival and just join that. And we've got all sorts of amazing people just helping people navigate, understand everything from security, because it's Ledger, through to how to think of macro. We've even got a whole panel on how I fucked up.
You specifically?
Not just me. I think there's a whole bunch of just different people. It's like, look,
got it.
Because part of it is honesty. It's like, what did I get wrong? Yeah. And why did I get it wrong? What have I learned from it? And how can you learn from my mistakes?
We didn't get to the one thing you did get wrong in your predictions.
We
just started talking. It was so minor. You said the Fed definitely wouldn't still be raising rates in June.
Yeah.
And they did raise rates past June, but I wasn't gonna bring us back to that. We got going.
I can't get more. I can't get it all right. I can't get them all right, but directionally,
you directionally were very correct. And I think it's striking just because, again, so many people were making such a strong bet in the other direction. Yeah. Which is why you definitely get credit for it. It wasn't like you were with the mainstream and you got it right. You were sort of outside the mainstream and got it right.
Yeah, really the opposite point of view.
Okay, but so realvision.com/ledger
/festival.
And I'll be moderating. I think I'm interviewing you. I don't know who I'm interviewing.
I don't know either.
I will be there on Friday.
We just both turn up and do what we're told. But the point being is, like, there's lots of amazing panel. Everybody from Keith Grossman to Ian Rogers to, you name it. Fuck Render's there. OV's there.
It'll be a good group.
Everybody. So we've got every panels on generative art, NFTs, cryptocurrencies, security, storage, macro, everything.
Great. I love it. All right. Well, let's turn it to audience questions, and then we'll wrap this up and we can have more drinks and food as people want it. Anybody have questions? I've got like a whole document I didn't get to, so I can keep going, but yes.
What are your thoughts on Bitcoin ordinal theory?
Oh, I was going to ask about this too. Continue.
The value proposition for the rare Satoshis, exotic Satoshis, and also the future of immutable data on chain.
So just so the podcast picks this up, and I was going to ask this when you were saying Bitcoin, Ethereum's more interesting in some ways because there's actual activity on it. Bitcoin is Switzerland. The question was about, what do you think of Bitcoin ordinals and ordinal theory? And there was a second part that immutable data on chain, which is intrinsic to ordinals because it's all on chain.
I think it's good. I don't think it's a great breakthrough, but it's given a lease of life to the Bitcoin ecosystem, and it's given a new narrative, and it's shown that Switzerland can also have a technology company and not just make chocolates and cuckoo clocks. And so it's a net good thing. I like it. It's broken the Bitcoin narrative that got really stuck into a not a very good place. And I think those assets are, the right assets will have value. I think the immutability on chain for certain assets will prove incredibly important for some applications of which we don't yet understand yet. The Bitcoin blockchain is incredibly important for certain reasons, and I think we will find use cases for that, and it won't just be about wizards. Overall, these chains are valued via Metcalfe's law, and Metcalfe's law is both the number of users and the number of interactions and applications between them. And Bitcoin suffered this side, had a number of users doing quite a lot of activity in size, but it was going to definitely lose a lot of ground to the other chains that has all the applications layer. This helps mitigate that, but it's still not scalable in the way as yet that Ethereum is or other ecosystems are.
Art on Bitcoin feels like it makes a lot of sense, like having it on chain and having it on like the Cadillac of chains from a decentralization perspective. Like I think art on Bitcoin does have a cachet, it feels to me. Do you feel that?
Theoretically, we haven't seen it yet.
Yeah.
If Beeple starts putting out all his art or Damien Hirst puts it all out on that.
Yeah.
But really currently, and again, doesn't mean that it remains the way, but Ethereum is the currency of the internet. Yeah. So we'll see. One
of my favorite stories, I guess, of this year was Peter Schiff putting out art on Bitcoin ordinals. Did everybody see this? Peter Schiff is like a notorious deep Bitcoin hater. He's an economist.
He's just a gold guy, right? He's
gold.
He's a boomer. Sorry.
He's a boomer. Sorry, Dad. You probably agree. You're into him probably. But yeah, he hates Bitcoin and he goes on TV and fights about Bitcoin all the time and says how useless it is. And he goes and he's like, I actually like art on this though. And he dropped his own Bitcoin ordinals collection, which I got a total kick out of. All right, any other questions? Yes. Oh, wow, somebody. Okay. Sorry, not you, Adam. We'll come back to you.
Hi, Big Dad. Nice to meet you. What do you think about the record number of credit card debt?
What do you think of the record number of credit card debt, which was also on my list of questions that I didn't get to? Are you worried about a credit crisis?
What I think it means is, look, credit card debt is because everyone's incomes went down, everyone had to top it up. Debt has been the way to do that. What it means is I think that the economic cycle coming out the other side is slower because everyone's paying interest rates on their credit card debt at ludicrous prices.
So we're getting liquidity, but some of that's going to our interest
Yeah, I
payments.
don't think
so it's
everyone
not
goes
fully-
bust and the credit card stuff goes bust, but I just think it's just like student loans. It's like, Christ, I got my credit card but debt to pay off now. So that just lowers economic growth. So I'm just a big believer that trend rate of economic growth is going down over time because population growth is falling, productivity has been not rising, and debt growth has stopped. So trend rate of GDP keeps falling. It's currently at 1.75% is the last kind of average over the last 10 years or so. And it keeps falling, and reasons like this is another reason. Excess debt slows economic growth.
This is my spicy question, not to put you on the spot. Do you have either like a favorite US presidential candidate or one that you think would be best for the economy? Didn't prep him for that one.
No. I just, the whole lot makes me want to wash my hands. You know, some sides, Robert Kennedy, really interesting. He gets it. Yeah. There are some really bad things going on in terms of how corporations affect America.
Yeah. He's got a big picture thing that's right, and then he gets a lot of specific things very wrong.
Yeah. And then he's just like, okay, this is far too far for me.
Yeah.
Vivek is like trying to be a Indian version of Donald Trump. And then we've got DeSantis is so dislikable, it's embarrassing.
Yeah.
You know, every time you see his face freeze, he's got like, it worries me. I don't see anybody on any side that really inspires people to think, okay, here's somebody we can trust. And I don't care whether it's left or right. I'm kind of bipartisan. I'm just looking for somebody who's pragmatic.
Yeah.
And I just yet don't see it. So I don't know. I have no idea which way it's going to go.
Yeah. Yang 2024. Just kidding. He's not running. I worked for Andrew Yang, for people who didn't know. Okay, Adam. Yes, let's close out with Adam.
Thank you. My question for you is, do you think Bitcoin exists purely as like a store of value with sort of like the chain on the side as it used to have? Or do you think Lightning can compete with Ethereum or L2s?
Before you answer that. So the question was, can Bitcoin exist as just a coin on its own, sort of aside from the chain, as a store of value? Can it continue to exist? Or does it need and can Lightning really scale to the level to compete with Ethereum and really have like an active ecosystem?
I don't know the point of Lightning. I mean, yeah, but we can do that in a million different ways. We don't need the security layer of Bitcoin, and Lightning doesn't have the security layer of Bitcoin. I just don't see its point. And that's why it's got such low usage versus other versions. Bitcoin as the store of value, yes, of course, that works fine. Bitcoin is perfect in its own right. Whether we develop ordinals and create it into something else, it's kind of a bit of a Frankenstein's monster. If it just stays doing what it's doing, it will not be the fastest growing chain. It may not have the most value. That doesn't matter. Gold is not the most valuable commodity in the world either. It just needs to serve its purpose. And if it does, the whole idea of having a neutral internet store of value, currency, collateral is incredibly important on a global societal level. But it's not a religion and it's not everything. So it's part of the foundation stones of things that matter. That's how I think of it.
All right, y'all. I'll still be here for a little while longer. I don't know if you have to dip out, Raoul. We're running a little long here, but thank you so much for being here. Thank you, Raoul. Thank you so much. You're the best. Always so fun. I don't know if we have pizza left, but there's drinks still. So I don't know if we can get music going. I think I'm going to try and play music, and I'll be here for a little while longer, and let's hang out.
Let's do it.
Love it. Thank you so much for watching this episode of Overpriced JPEGs. If you liked this conversation, if you liked this episode, please go ahead and hit subscribe. It helps me out, it helps the show out, and it means you will get alerts and updates when we post new content. Thanks again.